For Worksheet 1-1 of IRS Publication 590-B. This is titled Figuring the Taxable Part of Your IRA Distribution. So you would use this worksheet only if you made contributions to a traditional IRA for the tax year that may not be fully deductible, and you have to calculate the taxable part of IRA distributions during the same year to determine your modified AGI. So the first thing, I'll point out a couple of things really quickly. One, you'll see that there is what seems to be an incorrect tax year. So at the time of this recording, we're in February 2024. However, the most recent version of this IRS publication is this one that's right here. So there isn't a whole lot that changed from the 2022 tax year to 2023. However, we are in the middle of the 2023 tax season. And if you do need to use this worksheet, we'll walk through it. We'll talk about where, each of these years should be a year later than what is on the form in front of you. However, this is what the average American taxpayer has to work with as of right now. So please bear with me as we power through this walkthrough. So you are going to need a couple things at the ready. You should have your Form 8606 and possibly last year's for reference. You're probably also going to need your Form 1099-Rs, which would be your your reported distributions. And you should have records of what your contributions were for your IRAs. And finally, if you did any Roth conversions, you should have records of that information as well. So we'll walk through this. Basically, what we're doing is if you have no basis in your IRA and you did Roth conversions, or you take a tax, if you take a distribution, then you can consider it 100% taxable income. However, if you made non-deductible IRA contributions in the past, and if you recorded them on IRS Form 8606, then there's going to be a part of that distribution that's not taxable, and that would be the basis. However, you can't just take out the basis and leave the fully taxable part in your IRA. You have to basically do a prorated amount. So if your IRA consisted 50% of basis and 50% of investment growth, which is pre-tax, then when you do your distributions, you should expect that 50% of your distribution is taxable and 50% is not taxable. So that's kind of a very overly simple version of this calculation. But then it's also compounded by the fact that you can, due to the recent tax law changes, you can add money into your IRA. So now you've got to account for your basis as you're taking money out of your IRA and then putting money back in. And it can be relatively confusing. However, this worksheet is one of those ones where you just have to push the I believe button and power through. So we'll try and kind of get to the sticking points of where you would get the required information and hopefully this will illustrate what numbers need to be calculated and where you can get those numbers from. So let's start at the top. Entering your basis in the traditional IRA. So as of December 31st, 2022, if this is for your 2023 tax year. So you're taking the basis that was from last year's tax return. So the instructions for determining your basis really have to do with the last time you filed IRS Form 8606, because it's on one of the lines from your prior year 8606 that you would put into this. So if your and this would be from the form instructions. So if your last Form 8606 was filed between 2001 and 2022. You would find that on line 14. If your most recent 8606 was between 1993 and 2000, then it would be on line 12. And if it was from 1989 to 1992, it would be on line 14. And then if it was before that, then I don't know what to tell you. So, so in this case, we put our basis in the traditional IRA of $20,000. That means if you liquidated your entire IRA account balance, $20,000 of that would not be considered taxable income. The rest of it would be. So that's the way you would think of that. So on line 2, you enter the contributions to your IRAs during the tax year, during 2023, and then all 2024 contributions that were made for the 2023 tax year. So don't consider whether or not this was deductible, just money that went into your account. Also, do not include rollovers that were properly rolled over into an IRA. So from another IRA, from your 401k or some other workplace retirement plan, don't include those rollovers. And also don't include returned contributions that would be reported, described in the instructions for line 7 of your IRS form 8606. So certain contributions that might have been returned, don't count those. Just contributions that ended up in your account from outside money. So in this case, we put down $5,000. In line 3, we're going to add those two, and we come up with $25,000. So in line 4, we're going to enter the value of all outstanding IRAs, traditional IRAs, as of the end of this year. So if you had your basis plus your contributions, and that was $25,000, now we're going to enter the value as of the end of the tax year. So this would include any outstanding rollovers between IRAs. You would also subtract any repayments of qualified disaster distributions, which you would be tracking on IRS form 8915-F. So in this case, our account value is $40,000 at the end of the year. You should be able to find this on your brokerage statement. Usually the brokerage firms kind of do a lot of foot stomping because this is an important aspect to your tax calculation, whatever your account balance is on December 31st of a given tax year. In line 5, we're going to enter the total distributions from IRAs. So this would include Roth conversions, which we'll account for down at the bottom of this worksheet. We'll also include repayments of the qualified disaster distributions. Even though we subtracted them here, we're going to add them back here. Any QCDs, any one-time distributions to fund an HSA, but you would not include any outstanding rollovers that you included on line 4, and you're not going to include any rollovers between traditional IRAs that were completed by the end of the year. So also don't include the certain return contributions. So basically, we have $10,000. This was reported on John Doe's 1099-R. So in this case, we'll add up lines 4 and 5, and we come up with $50,000. For line 7, we're going to divide the $25,000 of the basis and contributions by the $50,000 that we have in our total balance plus distributions at the end of the year. So $50,000. So we divide that 50,000, or we divide that, we get 0.500 or 50%. Now we're going to calculate the non-taxable portion of the distribution, which is fairly straightforward. We'll take the We'll take the 50% and we'll multiply that by the line 5 amount, and we get $5,000. So $5,000, 50% of our distribution is non-taxable. We'll enter that on line 13 and 17 of the Form 8606. And then we're going to subtract this amount from the $10,000. So we get another $5,000 that was taxable. So if you didn't do any Roth conversions, you would stop here. This is the amount that you report on IRS Form 8606. So if you did have Roth conversions, you now need to determine the taxable portion of your distribution after you've accounted for the Roth conversion. So at the bottom of this, I put a note that I'm trying to pull up, basically saying that we should assume a $5,000 Roth conversion amount on line 16 of the form. So a Form 8606, obviously I'm not putting that on the screen. Let's just assume that we did a $5,000 Roth conversion during the tax year. So $5,000 would basically, we would have to go through this calculation down here. So we divide the line 16 number by the total amount of distributions on line 5. So the $5,000 divided by the $10,000 total distributions, what that means is there's a $5,000 distribution that went to us, and then there's a $5,000 Roth conversion that went into the Roth IRA. So basically, we've got $5,000, and now we're going to, or 50% of the Roth conversion would be, or 50% of the distribution would be allocable to the Roth IRA conversion. So we put in $2,500. This would also go on line 18 of IRS Form 8606. And then the taxable portion of the distribution after we've accounted for the Roth conversion would be line 9 minus line 10. So in essence, we calculated 50% of the total distribution was taxable income, and then 50% of the distribution that was considered taxable income is a Roth conversion. So we would put the taxable amount of the distribution after the Roth conversion into line 15A of IRS Form 8606. So that might sound a little confusing. Let's go ahead and come up with a different number for the Roth conversion amount. Let's say that this was a $4,000 Roth conversion. So now we divide the $4,000 by the $10,000 in line 9. We come up with a percentage that's 40%. So now we're going to take 40% of this $5,000, and that would be $2,000. And that's allocable to the Roth conversion. And now we're going to subtract that $2,000 from the $5,000. And we've got a $3,000 portion of the distribution that is not related to the Roth conversion. So we would report those in those respective lines of Form 8606. So that's all we have for this distribution worksheet. Like I said, this is the most current version available as of the time of this recording. So not a whole lot has really changed in the tax rules, and you probably will have to use this worksheet unless the IRS updates it within the next month and a half to 2 months. But a lot of people have already done tax returns, so this is the worksheet that we're using this year. So we'll put links in the show notes to the respective forms, specifically forms that you may need to access or enter different lines from. So IRS Form 8915F, IRS Form 8889, obviously IRS Form 8606, and then your 1099-R. So we'll put links in the show notes to all of those videos and articles. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's a topic that you'd like to see discussed in an upcoming video, don't hesitate to hit me up in the comment section. Thank you very much and have a great day.